This is Robert Kraft, and I'm your host on SNN.Network. And joining me today is Rene Goehrum. He is the chairman, president, and CEO of BioSyent. It's a publicly traded company. I got two symbols for you: RX on the TSX Venture and BIOYF on the pinks. Rene, great to see you. How you doing?
I'm doing very well. It's great to be back with you.
It's been too long. You know, we missed you. So, as I said, it's been about actually 4 years since we had you on the program. So before we get into an update and some highlights and really getting into the story a little bit, for those who may have missed our 4-year-old interview, let's get a very quick overview of the company, and then we'll go from there.
Sure. BioSyent is a pharmaceutical company based in the Toronto area. So we consider ourselves a specialty pharmaceutical firm. So we don't do a product development. We in-license products that are unique and differentiated, not available in the Canadian market. We look for things that address an unmet medical need or do something better than other therapies that are available, and work with healthcare professionals to make those products available to patients in Canada. We commercialize those products. So in essence, we've built a commercialization platform. We take those products across Canada. We do also have some business outside of Canada. That's really just one of our brands. And we've got partnerships outside of Canada where we commercialize as well. Pretty simple story. We've been profitable for 39 quarters. More impressive than months. So 39 quarters. We're creeping up. I'd say with confidence that number is going to be, it's going to tick over on the odometer to 40. A capital light business model. We are a high ROE company. We earn 19% return on equity on a trailing 12 months to March 31st. We have been a growth story, although taking a little bit of a break from high growth in the last year and a bit. But I think that's about to resume.
Well, I want to dig right in on there because that's a nice transition, because the company did just publish its Q4 2019. By just published, it was in March, but you guys did just publish the Q4 2019, full year 2019, and Q1 2020 financials. So the last couple months, where the company reported flat net revenues for full year 2019 versus 2018. However, Q1 2020 net revenues increased by 35% versus Q1 2019. Plus Q1 2020 EBITDA increased by 66% versus Q1 2019. So we'd love to hear you elaborate a little bit more about BioSyent highlights over the last, let's say, 18 months.
Sure. Those are eye-popping numbers in the first quarter, coming off of a fairly flat sales performance last year. There were some puts and takes that contributed to that. We had a strong start to the year. This year, we had a COVID effect on that, and so we had some pull forward from what would normally fall into the second quarter in terms of revenue. But if I kind of go back the last 18 months, as you're asking, kind of what have been the highlights, I would say that we've in-licensed a new portfolio of pain products that we've been working on preparing for market. We've gotten Tibella, which is a hormone replacement therapy for postmenopausal women. We got that product approved last year and have been preparing that for launch. We've been advancing our strategy, a life cycle strategy for our largest selling product, that's FeraMAX, which will see several product innovations now over the next couple of years, quite frankly. We've been investing in technology and business intelligence to essentially prepare ourselves for the next leg of growth. And we've been buying back our shares. We reduced our outstanding fully diluted share count by about 11% in the last year and a half since we started a normal course issuer bid.
Got it. So you mentioned this a little bit in that overview just now about COVID having an impact on the business. How has it in general, would you say?
Well, there's been pros and cons. It's impossible to have no effect of the mother of all business interruptions. There have been some positive effects on our business. I mentioned after a pretty strong start to the year, we had a surge in revenue demand across our portfolio of products. And that contributed to an extraordinary first quarter that you referenced in our recent results that we put out a couple of weeks ago. That pulled some business out of April, essentially. We've seen revenues come close to normalizing in May, and so far we're pretty early in June, but they've been normalizing for the most part. It speaks a little bit to the resilience of our brands, the importance of our products to our customers and to patients. You know, there have been some things on supply chain. We had extraordinary demand on some products. We ran out of stock. We've managed to get those products back in stock. There have been some delays to launch activity that we would have expected to be in market by now or close to now. So there will be some impacts around timing, not long-lasting impacts, but there'll be some things around timing. Of course, from an operational perspective, we on a moment's notice, we took our office staff and we've all been working remotely up until last week, where we're just slowly reintegrating into an office environment. And our field sales team, we've got two teams that work against different customer sets. They were pulled out of the field as well, and so they've had to work to having access to their customers through digital means and virtual selling. So that has been a big impact. Our business relies a lot on one-to-one selling and detailing of health professionals. And so that, I would say that's the biggest question mark for us now. In general, Canada's taken a very conservative approach on how to manage both shelter in place and opening up the economy, but things are starting to move now. The data from a public health perspective is pretty good, and so we're seeing signs that we're getting access back to our customers slowly, but that's starting to move now.
Well, I'm happy to hear that for you. I mean, look, at the end of the day, there's a time and place for innovation, and then there's a time and place of, like, you know, what works, you know, and it's trying to balance that equation of, like, okay, do we change up our processes completely right now, or do we just kind of wait a little bit until things open up a little bit more? Like, how do you think about that?
Yeah, you know, I think there are going to be some changes that have been brought on by a COVID-19 pandemic that will stay with us, full stop. But I don't think it's going to be unilaterally one or another. I think there's going to be some elements of the promotional mix, let's call it, that will be more permanent, and we're already doing that. So one of the products that we're getting ready to launch, we've been doing advisory board meetings on a national basis with healthcare professionals, key opinion leaders. We've now started rolling that down to a regional basis. So we did the national one last November, and it was an in-person meeting. We've started now rolling that out to regionals, and those are Zoom calls. So we've started implementing that. We're starting to do lunch and learns where we're introducing our customers to attend and get information on products and education on products through virtual means. And I think that part of it is going to stay part of the mix, but I think, you know, face-to-face selling it'll be back.
Hey, we all hope so. Right. So you actually alluded to this again in the highlight and even just now a little bit about Tibella. So as you said, you have announced two upcoming product launches, Tibella and Combogesic or Gesic?
Combogesic.
Okay.
Yeah.
You know, and I have to ask you, from what you can tell us, what are your revenue expectations for these two products over time?
Right, so they play in two different markets. Obviously, one is in hormone replacement therapy. We have a kind of a niche subset for vasomotor symptoms. These are hot flashes in postmenopausal women. So it's a subset of that marketplace. Smaller probably relatively smaller product. The Combogesic product has more broad application for pain management. And I would say those two products, together with a number of other product initiatives that we've got that we're generating out of our existing portfolio, will give us the fuel to see our revenue grow at a double-digit clip for 6 to 8 years without, further in-licensing activity. Those two products together with our existing portfolio. Rather than put estimates out on kind of what the revenue will look like, there are a lot of factors around timing, but we always kind of like to look a little bit further out on the horizon, and certainly going well beyond a double of the size of business that we have now. We feel comfortable that we've got those assets that are in the business and shortly coming to market.
Yeah, because I mean, real quick, could you give our audience kind of a basic overview of the company's business model and why in-licensing is something that's very important to your whole strategy?
Sure. There are a number of different ways to be in business in pharmaceuticals and specialty pharmaceuticals. We have generally avoided investment in R&D. We've made recently some modest investments in that area, but generally we leave the discovery and development of new chemical entities and new compounds and new therapeutics to those that have that expertise. It's capital intensive. It's on the spectrum of risk. It's more towards the spectrum of risky, and that's just not our model. Our approach is to in-license products that are proven safe and effective, and that perhaps might be off the radar of the much larger pharmaceutical companies. And so we just find that gives us a more appropriate way to approach the market and not take that R&D risk. We will invest the money in commercialization, in putting feet on the street, and we've built our team and our personnel over the last 5 or 7 years. We're a much more substantial business. We've got a larger commercial footprint, and as we in-license into new therapeutic areas, we'll continue to add to our people, but it's more our investment is in customer-facing personnel as opposed to R&D.
And Rene, in all seriousness, are you employing a lot of former bachelor employees or want to be bachelor employees? Because they're all in medical sales, so I'm sure they're looking for employment right now.
Yeah. I mean, I would say this. I would say the continual kind of shaping and reshaping of the industry with the larger multinational players has provided an ongoing source of talent for a company of ours that's emerging, where we're maybe adding a half a dozen people in a year. There's a lot of folks that come available.
That's a great answer to a terrible joke. So I appreciate that. So my next question is, get back to what we're doing here. So FeraMAX, it's been a large revenue contributor to BioSyent. Are there any concerns about the durability of revenue from that brand moving forward?
Yeah, it's been a high concentration of revenue for us for quite some time. We've been working at evolving the brand and the business. For 5 years running now, it's been the #1 recommended oral iron supplement in Canada. It's a very competitive market. In spite of that very competitive market, our units have increased every year. Our dollar revenue has increased every year. So we're always kind of sleeping with one eye open on the competition to understand what they're doing, and that's a reality in the business. But I would say performance over the last 5 years with that business tells me we've built a brand that's recognized by pharmacists, doctors, nurses, and consumers or patients, and that has given the brand some durability. We are making we've been making some investments in some new technology and some initiatives that I think will make that an even stronger brand going forward.
And my next question actually has to do with what we were talking about earlier with the company's business strategy and in licensing. So what does your new deal funnel look like right now? And are you still seeing opportunities to acquire or license new products?
Yeah, so I think of those, I parse that in two different ways. We'll look for in-licensing opportunities. We'll also look for assets that are already approved and in the market. And from time to time, we've been more aggressive in looking for in-market assets and in essence, acquisition of products that are immediately revenue generating. And what we found over time, we've looked at many opportunities and put in expressions of interest on those. And what we have found was that the pricing of those assets has kind of been outside of the realm of our assessment of how we can get a return on that. And so most of our focus in terms of what we proactively are working on is in licensing. But we have found over time now that more in licensing opportunities are coming to us unsolicited now that we've built a bigger footprint in the Canadian market. There's a large innovation conference that goes on every year. It's called BIO. You may be familiar with it. It was to be in San Diego this week. And the whole thing was converted to a virtual conference. And my business development team has been getting up at 3 in the morning and working until 8 or 9 at night doing meetings with potential partners all around the world. I think this week they had 40 meetings scheduled. And what they described was that this year, it seems that there are more real tangible opportunities for us coming out of this meeting process. So we have a few things that didn't come out of the bio meeting that we've been working on now for quite some period of time that are fairly near term. We're moving nicely through the process, diligence and negotiation. But we've seen no letdown in the deal flow. It's really just making the decision on which ones we think are going to fit our strategy and our portfolio the best, and then coming to a win-win deal with the other party.
So with that, looking forward, from what you can tell us, what will be some of the growth drivers then for BioSyent?
Well, the Combogesic launch, which is slated for later this year, the Tibella launch, which we've already announced, we've started promoting, and you should be looking for news around shipment sometime in the next 6 weeks or so. Those will be two growth drivers as we go forward. I've already mentioned the FeraMAX innovation and life cycle strategy. There'll be some things coming later this year on that, and then that will continue. There'll be more initiatives that you can look for as we go forward with FeraMAX. We have, as I mentioned, one kind of fairly late stage negotiation that we expect high level of confidence to bring that over the finish line. That's an asset that's approved, so it should see the market. I would say of that, there's 7 launches or product initiatives that we would be bringing to market somewhere in the next 18 months. And they collectively will see us drive that double-digit growth that I mentioned earlier.
And Rene, where can my audience go and find everything they need to know about BioSyent?
The easiest place is to go to BioSyent.com, www.BioSyent.com.
Well, Rene, thank you so much for doing this today. I really appreciate you taking the time to give us this update. I wish you luck, stay safe, and I look forward to the next update.
Thanks, Bobby. Nice connecting with you.
Nice connecting too.